From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 22nd, 2016. I hope you had a great weekend, ready to get started with trading for this week. In today's video, I am going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we'll be looking for entry or exit opportunities. First off, let's start here on the USDCHF, US dollar versus the Swiss Franc. We're looking at the daily time frame. Over the past several weeks, we've seen significant changes here for the US franc. A significant fall from the 1.0200s all the way up here at the last high we see, all the way into the 96s. And then a reversal coming right back up over the past couple of weeks from the 96s, now back approaching the parity level 1.0 once again, as it continues to rise. Significant rise over the past couple of weeks has basically retraced half of this previous run. If you take Fibonacci from the high down to the low, 50% sat right around the 99.55 level. That's the top of this green shaded area, and we're just above that today. Obviously, today, we see the bulls in control. This current daily candle rising from the 98.80s, now again pushing up here closer towards the upper 9900s, again approaching the 1.0 parity level. I think this week that parity level will be a key decision point for the US franc. As long as we're underneath it, as we are today, we're likely to look for some resistance for the intraday. Anything above parity, above 1.0, we're likely looking for the continuation higher, pushing back towards the 1.1 or even into the 1.2 level as it continues to pressure back up against this previous downward run that we see right here. If we're looking to buy, we want to buy on dips to support or breaks through resistance. So today we're above the green zone. That would be our last resistance level. So if we're looking for a buying opportunity, it needs to dip back down into the top of that green shaded area, 99.50, 99.30, before we look for a buy scenario. If we're looking to go short, obviously underneath the 1.0 level becomes an opportunity this week, early on this week. 4-hour time frame, again, here we are coming into that parity level. Let's put a little black arrow there. That's our resistance zone for the day today. And obviously the current 4-hour candle challenging and testing very close to it, 99.90 or so. Again, if we're looking for a buying opportunity, we would likely do that back down here towards the green zone. Remember, buy low, sell high. If you're going to buy something, you want it to be at a low point, not a high point. So it doesn't make sense to go long right now underneath the parity level. If you're going to go long, you want it to dip back down. 99.50 or so becomes your best opportunity. Now, if you're looking for an opportunity to go short, which I don't think there's really any indication of the bears coming in to control here. There's no real indication of resistance or reversal. No shooting star candlestick or whatnot that implies that the bears are coming back in. So nothing really to approach that direction yet. Now, if it gets back underneath the green zone, that might give us hope for some more downside. But for the time being, I think sitting on top of 99.50 might be our opportunity to go long for the US franc in the current direction that we've been going in over the past couple of weeks, and really only looking for clues to resistance and reversal before we would even consider going short for the US franc. Moving on over to the EUR-USD, just a similar yet opposite situation going on over here on the euro. We see the rise, and over the past couple of weeks, the fall. Some interesting things happening here around this blue shaded area, the 1.1 level. Follow it back in time, and you can see that historical resistance high over here on the left-hand side. So that resistance high helping us identify this blue shaded area, 1.1. Yeah, right around, give or take, 10, 15 pips on either side of 1.1. But that's the blue shaded area we're seeing right here. Let's go ahead and put an arrow there. That's obviously our support for the day. Today, you don't really want to go short right now as the market sits on top of support. So where do you go short? Well, it has to go back up. Remember, buy low, sell high. Again, if you're looking to go short, if you're looking to sell a pair, you want it to go back up before you do it. I think 1.1100 would be a much better place to go short if you were looking to do that here for the euro dollar. Let's take it on down to the 4-hour time frame. Doesn't really change it, just gives us a little bit of a more consolidated view, a little bit more of a precision view, if you want to say something like that. We can see again, I think if you're going to go short, it needs to go back up to the purple shaded area. You don't really want to go short right now. Now, obviously, if it breaks underneath the 1.10, 1.1 level, underneath the blue shaded area, we might look for the continuation and the drift lower back down to the next area, down into the 109.50s and 30s. That's the orange shaded area down here. But I think that's going to be a tough row to hoe to get underneath the 1.1 level today. So selling back to the purple zone to go short, or break through the blue zone, but not too far to go beyond that before it reaches the next support. Obviously, this becomes an opportunity to watch for support and reversal clues and evidence. Nothing really yet to speak of here, but definitely an area that you might look to watch for that right around the 1.1 level today for the euro dollar. Making a move on over to the GBP USD, significant fall over the weekend that we see here for the pound dollar and many GBP currency pairs. The risk of the UK exit from the EU really weighing on this currency pair. Last week we actually started selling this currency pair anyway, so that was kind of good news that we were selling and going short on this currency pair last week. So if you stayed into that, it's been a significant boon for you, and you're seeing a great deal of profit. Right around the 1.4085 level, that's our last lows that we see here, the pink shaded area. So obviously, going short at the bottom. I've already said it a couple of times today. Buy low, sell high. If you're looking to sell something, you don't want to sell it at the very bottom. You want it to go up. I don't care what you're selling, whether you're selling currency pairs or t-shirts. You want to sell it at a higher price. So I think we more likely would be looking for the return back to 1.4200, the green shaded area here, before we would consider this a new selling opportunity for the GBP USD today. Let me see if I can pull that over a little bit and get it closer here. So I think we look forward to go back up 1.4200 before we consider this a selling opportunity. Really, unless it comes back up there, the next opportunity that we would look for would be the open and close and breakout underneath this pink zone, which is right around the give or take 15-20 pips around the 4100 level, the pink shaded area here. Of course, if it continues to pressure lower, we have closer like down into the mid 1.3900s as our next target. So one of two things to go short here for the pound dollar today: rally to the 4200 level, the green zone, or significant breakout underneath the pink shade area. I don't think there's any real reason to go long right now for the pound dollar. 4-hour chart doesn't really change it, just gives us again a little bit more detailed zoomed in view here for the currency pair. I don't think we're going to see a push back to 4200 today, but the market could surprise us, so that becomes an opportunity again. The next opportunity will be the breakout and hold underneath 4100. This could be a false breakout. Don't assume that this is a real true breakout. We have to see confident indicators of a breakout before we look to go short again here for the pound dollar. Moving on over to the USDCHF, nothing significant I think here to speak about for the day today. Zoom it out one time here on the daily time frame, and you can see that long-term blue trend line and the 100 period simple moving average coming into play. Just here into the mid to upper, more likely closer to 3600. 1.3600 is where we see that trend line and moving average coming into play. A little bit lower than the current market, so there's definitely the possibility of seeing some more movement down before turning back higher, but definitely working into a key level of support right now for the US CAD based on the daily time frame trend line. Zoom it back in a couple of times here. Right now sitting on top of the pink zone, 3700 or so, acting as our support for the day today. If you're going to go short, again, you want to go short at a higher point. I think that would be back closer to the low 1.38s or the breakout underneath this current support level, the pink shaded area. But definitely watching this blue trend line, yellow shaded area, 100 period moving average right around or just underneath the 1.3600 level as support. 4-hour time frame, we can see it bouncing around in here in between the orange and the pink shaded area. Clearly, we know today that the pink zone can be support for us for the day today, and we need to see the breakout underneath there if we're going to go lower. So, sellers, if you're looking to go short here on the US CAD, look for the orange zone or under the pink zone. Buyers, watching this pink shaded area for clues to support and reversal today for the US CAD. We've spoken about this quite a bit over the past several weeks in the trade room. Watching oil for some clues here. We can see a significant rise in oil coming all the way up here to the 33 level. So a rise in oil typically means we're looking for a little bit of a fall on the US CAD, and that's exactly what we've seen over the past several hours. So if oil continues to go higher, then we look for the continuation lower here for this pair. If all of a sudden oil starts to drop again and go back down, we'll likely look for this to turn back up, find support, challenge the orange zone or higher for the US CAD today. Taking a move on over to the USDJPY, obviously this 112 level has been significant over the past several days. In fact, let's go out here to the weekly time frame because we looked at this last week. Take a look back here over on the left-hand side where the red trend line is. Underneath that green shaded area that the current market is finding support at, there's not much to stop it before reaching down into the 110 or even into the 109s. So as long as it holds above 112, I think we're looking for support. But anytime it breaks underneath 112, not much to stop it for reaching down into the 110 or even the 109s here for the US yen. Back to the daily time frame. So this 112 level, 112.0, will be critical for this week. If it stays above that, as it has so far today, then we look for support and potential clues to reversal, higher highs and higher lows. If it breaks underneath 112, we likely look for a significant fall. And I think a breakout would be an open and close. 4-hour time frame doesn't really change it. Gives us a little bit of a zoomed in view here. Take a look. We found support at the green zone. Current resistance is the orange shaded area. If you're one of those folks looking to go short on the US yen, you're probably at a pretty good spot to do that today. Next thing you don't look for would be the breakdown underneath 112 in the green shaded area. Anything above this orange zone, if it gets above, let's say, 113.25 to 45, that's the orange shaded area. If it gets above 113.45, I think we're likely looking for a little bit of a drift higher back towards the 114 level for the US yen early this week. Moving on over to the AUD USD, let's take a peek at the weekly time frame first. We've looked at this a lot over the past several weeks in the live daily trade room. Long-term downtrend. Zooming in a little bit on the weekly, you see the red triangle pattern. We're coming back up underneath there again to challenge it one more time. Keep an eye on that trend line. We are above it this week, so we'll definitely watch that. But I do want to recognize the fact that we're coming up underneath that triangle pattern once again. Let's go down to the daily time frame. This yellow shaded area, even right here into the 72.50, 72.70 level, would be an interesting area for our next resistance here, coming right underneath that triangle pattern line, that trend line coming up in the triangle pattern. So watch that yellow shaded area as resistance if it makes it all the way up into the mid to upper 72s. Currently 71.90 or so, 7200 holding as our resistance. That's the orange shaded area that we see at the current market price. Definitely watching that as a potential breakout opportunity for the day today. If it opens and closes, breaks out above 71.90, 7200, I think we're easily looking for it back up here to the yellow shaded area. So let's watch for that today. Back underneath the orange zone, if it gets back underneath 71.70 or so, we could be looking for a reversal once again. 4-hour time frame. We've sold this over the past couple of weeks and made some profit from the orange shaded area. I definitely don't think you want to sell it right now as long as it's challenging above the orange zone. Back under there might be the opportunity for it to go back down again. So right now, I think the best opportunity today on the Australian dollar might be looking for the breakout of 71.90, 7200, and a target back to 72.50, 70, the yellow shaded area. That becomes our next opportunity to go short for the Aussie dollar this week. Next, moving over to the New Zealand dollar, NZD, USD. Again, let's zoom out to the weekly. We've talked about the long-term trend over the past many weeks in the live trade room. Back to the daily. Here it is coming in here. Look at that blue box. We've been staggering around inside that blue box for a long time. Taking sells, in fact, over the past couple of weeks into the orange and even the pink shaded areas here become opportunities for us here on the New Zealand dollar. 66.65, 66.85, 90 is the orange shaded area. As long as we're inside or underneath there today, could be a resistance for you to go short again. We did that last week, made a decent amount of profit. Could be another opportunity here between 65 and 85 here inside the orange shaded area. The risk there is that it breaks above and starts working its way higher towards the pink shaded area up here, and that's really what's been happening over the past few weeks. Of course, the current support is the yellow shaded area at the bottom of the blue box. 4-hour time frame. Again, here we are right now underneath our orange zone. I definitely wouldn't think that this is a good opportunity to go long or buy this currency pair. In fact, for the day today, within and underneath that orange zone could become your opportunity to go short, targeting the yellow shaded area, watching for a potential breakout above 66.90 or so. Could send this all the way back again towards the pink shade area. So we're at a critical decision point today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.